Good afternoon, and welcome to the American Bankers Association webinar in conjunction with Lenders Cooperative. The title of our webinar today is SBA Loan Servicing, Managing the Portfolio After the Close. My name is Tim Pannell, Vice President of the ABA's Partner Network and Member Engagement. We will get started in just a moment on this program discussing SBA loan servicing, how to manage the portfolio after the close. But before we begin today's program, let me run through a few administrative issues. If you have any questions at any point, please use the Q&A area you'll see to the right side where you can put in a question. We'll answer those questions for the audience at the end of today's webinar. Also, in the coming days, in a follow-up email, we'll be distributing a link to a recording of the webinar to all attendees, so you can look for that. Now, today we're very thankful to have our premier partner, Lenders Cooperative, with us. We've had a little bit of technical difficulty in the fact that Chris McClinton was going to be joining us from Lenders Cooperative along with Rachel Hunsinger, but Chris has not been able to get in yet, so he may come in at some point, but he's not here yet. But we want to go and get started, and so we do have Rachel Hunsinger, head of SBA servicing for Lenders Cooperative, and she's going to start us off, and we'll look and see if Chris will join us at some time. So, Rachel, thank you for being here, and we're looking forward to it.
Thanks so much. It's a pleasure being here. I am Rachel Hunsinger, head of SBA servicing for Lenders Cooperative. Just to give you a little bit of a background about myself before we kick off, I do have roughly 20 years in the industry experience, specifically around SBA lending, but in the commercial lending space as well, and have previously worn the lender hat. So speaking to all of you lenders out there, I know what your pain points are, kind of some of what your challenges have been in the SBA lending space. So I was thrilled to have the opportunity to join Lenders Cooperative earlier this year and put on my LSP hat so that I could use some of the previous experience I have as a lender to help educate and kind of eliminate some of those pain points that you all have experienced. And I do see that Chris has joined us, so thank you, Chris. We let the audience know you were having a little bit of technical difficulty, so glad that you were able to join us. I was just giving quick introduction about myself, haven't really kicked off, so I'll just hand it over to Chris, our President and Chief Revenue Officer here for Lenders Cooperative. Let you take the reins here, Chris.
Yeah, thanks, Rachel, and sorry about that. As well to the audience, I had a little trouble getting in. But I'm delighted to be here speaking with you for the next little while. And I bet Tim probably let the listeners know that today we're going to be talking about best practices for SBA loan servicing and the business case for partnering with an LSP for the post-close loan support. And I don't think I could have a better person to talk to about that subject than you. So thanks so much for being here, Rachel. I think Rachel did get to introduce herself, but Rachel is the head of SBA servicing for Lenders Cooperative, and we are sure lucky to have her. So let's jump right in. So just, I'm for a minute, let's pretend I'm the rock star originator, underwriter, chief lending officer who's just closed a big loan, and I'm spiking the ball. And I'm handing it off to my servicing team for maybe slightly the less glamorous work, but the critical work of servicing. And so we're going to get to hear from you about why that's so critical today, and why maybe that part of the loan life cycle deserves a little bit more glamour, because I think it's really where the sort of the rubber meets the road, if you will. But once a lender has an SBA loan on the books, what are some of the servicing responsibilities that they need to handle?
Collateral tracking, lien perfection, that is probably paramount in the servicing space. The 1502 reporting, I know 1502 is that four-letter word, or in this case, the four-number word. That we use, but a lot of people don't really understand the critical nature and kind of the importance of that report with the SBA. We handle that. Annual loan reviews, loan modifications, handling of the special troubled assets and what that entails from an SBA perspective. Ultimately, we ensure the ongoing compliance with the servicing SOP. Side note, I spoke with someone a few years ago who was actually an examiner in was surprised to hear that there was a whole separate servicing SOP than there is for origination. So that just kind of underscores how much under the radar servicing flies. So it is our job to ensure that there is ongoing compliance with that servicing SOP, all of the loan program requirements. Those are key responsibilities of the lender that all fall within that post-close servicing workspace.
That's a word that sounds kind of like a term of art. Lien perfection, is that a thing? What does that mean exactly?
That is a huge thing. Lien perfection, it cannot be understated. A lot of people proceed with filing the lien. It's out there. In fact, many lenders proceed with a pre-filing so that they say, okay, the lien's out there between now and closing. We ensure that our position's intact. We don't have to worry about all of that. But perfecting the lien is what happens really after that lien is filed and after the loan is closed. It's the first step to protecting the collateral, because what that does is it ensures that the lien position is truly filed, it's on record, and that it's not just filed, but it is in the position that is intended. This is especially important when your uses of proceeds are focused around debt refinance. You can pre-file your UCC, but if you're waiting post-close for another lender to file their termination, if they don't do that, your lien position ultimately remains in a junior position. If it's supposed to be in a senior position, this can get you into trouble. So ensuring that it is perfected, it is where it is supposed to be in the lineup. And if you do not perfect that lien, you're ultimately out of compliance. You cannot complete your due diligence to continue protecting that collateral throughout the life of the loan. And I will also mention, because this is something that is often overlooked as well, if you are a lender that sells your loans on the secondary market, you cannot sell them on the secondary market until those liens are perfected as well. That is directly in correlation with the terms of the 1086 that are often not complied with. So perfecting that lien and ensuring that it is intact is so critical to compliance throughout the rest of the life of the loan.
Thank you for that. So why, in your words, is effective servicing, it's not just impacting the borrower experience, of course it is, and I'd like to hear from you about like in what ways, but it's also, it impacts the lender's standing with the SBA. So maybe you could talk for a minute about those two things.
It does, yeah. So effective servicing, as you said, it does impact the borrower. It impacts the SBA. It also impacts, the lender. So I'll kind of peel back the layers to those three components there. The lender can lose their SBA guarantee within days of loan closing if they do not ensure all post-close and post-funding requirements are followed. Again, going back to the lien position, cannot overstate the importance of that. Failure to protect those lien positions, ensuring that collateral is maintained and protected for the life of the loan, reporting your payments properly, going back to that 1502 accurately, all of that impacts your guarantee. And if you do not follow those SOP rules, you're ultimately jeopardizing you as the lender. You're standing with the SBA, and not just that, but the integrity of the SBA's programs. So as the SBA looks at lenders standing holistically and collectively across the lending network, if you're not honoring consistently those program requirements, the government is going to potentially rewrite the SOPs. We've all, I think even new lenders are aware that the SOPs can change, they can shift. There's CFRs that are constantly being presented and brought to the forefront. And some of that is directly related to what is happening in the market with lenders trying to be involved in these SBA lending programs. So the types of loans can be impacted. The whole point of SBA financing at the bottom is to preserve, protect, and grow the small business sector. That's why it's there. Mm-hmm. We need these SBA programs for the country's small businesses to survive. So servicing those loans is so critical for, the borrower to continue to receive the benefit of these programs, the SBA to allow some flexibility and unilateral authority with the programs, for the lender to continue to be in good standing. The smallest error can make the biggest difference when it comes to the SBA's decision to honor or dishonor the guarantee. So again, accurate reporting, proper file maintenance, diligence in conducting your loan reviews, all of these steps help to protect not just the loan guarantee itself, but the integrity of the SBA programs.
Well, you put it like that, it makes you really appreciate to some degree that all of the lenders participating in SBA lending are to a degree in this together. Like
Absolutely.
you need to mind the rules if you want the programs to continue to be available. And to your point, not just for the lenders, but for the millions of small businesses that just depend upon this financing. During the course of your career, I know that just because I've had the opportunity to hear from you about it, but I'd love for our audience today to do the same. You've had the opportunity to do your work, which really just runs the gamut of servicing from SBA, conventional, maybe servicing for performance loans, intensive servicing. But you've had the opportunity to do that both, let's say, on platform and off platform. And by that, I'm not referring to any particular platform, although the Lenders Cooperative one is a great one. But just the presence of a technology platform to automate, to digitize some part of that workflow. And so it would be interesting, I think, for folks to hear your take on, what is that experience like for the servicing teams, not just for you and your teams, but like how it ultimately can impact our clients, the lenders, whether that is that platform is there to facilitate that or not.
Sure. Yeah, the difference between trying to properly manage, service, monitor a portfolio off platform and on is unparalleled. On platform, you have so much more visibility, transparency, and these are among the biggest benefits to me in utilizing technology. When all stakeholders, and I'm talking from your brokers, your borrowers, your BDOs, your attorneys, your other third-party vendors, originators, closers, all the way straight through to servicing, when you all can see the same information in real time, it reduces back and forth confusion that we have all experienced on a daily basis that's caused by that manually sharing of the data. This applies to everyone involved. From a servicing standpoint, technology further aids lenders in the tracking and monitoring of that portfolio, which is so critical to remaining compliant with SOP. And often the task that is the most overlooked, because it does tend to be so manual. I remember, early in my career having to use calendar reminders to myself. I would set that up back in the day before the, iPhone and all of that. I would send myself voicemail messages at work so that I'd remember to do something the next day as I thought about it in the middle of the night, or, calendars to send me notices via email. All of that can trip you up because you're relying on essentially yourself to remember. You're relying on another person. When you can put all of that into a platform so that it automates, sends those ticklers, not just to you as the user in the servicing side, but you can send reminders directly to borrowers, to insurance agents, again, going back to all of those third-party partners that you use, so that they're getting that real-time communication. You're not overlooking, you're not being delayed. Oh, I don't have time. I don't have capacity today. We'll pick this up tomorrow. It's still, 90 days out till that insurance expires. Oh, I've got another 60 days. I've got another 30 days. You can continue to kick the can if you're manually responsible for doing all of those things. Having a system that tracks that for you is so key. Automating reports. Reporting is a huge component in the lending space, both conventionally and in SBA. I know banks, credit unions are all heavily regulated in reporting, goes hand in hand with that, constantly having to send information to shareholders, board members. Having the automation behind that is key to getting accurate data. Anytime we apply human element to something, there's a larger margin for error, and technology can help reduce that to ensure that the integrity of the data, the authenticity remains. And again, just that visibility and transparency is huge.
Yeah, I can imagine having to kind of bootstrap your own tickler system might not have been the easiest thing. And also,
Excel used to be my very good friend. It's not so much anymore now that I've seen technology. So.
Yeah, and you get into this business, as a provider, and it's really it continues to surprise that there are so many lenders that are still operating in a maybe there's a platform for a piece of the puzzle, but for a significant part of the workflow, it is a manual Excel, Word document, as you said, sort of Microsoft Outlook reminder system. And with that, as you were speaking about sort of the so many benefits that come from having a platform, just the audit trail to know, like, if
Absolutely.
you need it, like all of the communications, the document exchange with the borrowers, the LSP's communication with the lender that it's partnering with, like having a platform that can make it very clear these actions took place, this person was responsible, this was the time and date. I mean, the list goes on, but
yeah, it does. And if I could actually just expound on that a little bit, you mentioned the documentation. That's huge, because documentation is critical in the SBA space. We all know that sometimes we ask borrowers for things, you can't get it. A lender can only do so much. Having that record, the date timestamp of at least your attempts to collect information is very important to the SBA to see that, yes, the lender has still, despite whatever deficiencies there might be with the borrower, the lender has still honored their commitment to attempt to get these things, to collect these documents, to ensure that they are compliant with SOP, they're protecting their collateral, and technology just enhances the ability to do that.
Yeah, that's a great point. I've also, since I've started working with you, begun to have a much better appreciation for the difference between servicing and intensive servicing. Almost two completely different worlds in kind of that phase of the loan life cycle. Maybe you could talk for just a minute about first of all, in your own words, what is the difference? And secondly, the importance, if you are a lender, a financial institution, and you are partnering with an LSP, why it's so important to make sure that they have that expertise, that capability that they're able to bring to bear.
Sure.
Speaking to the intensive servicing capability.
Yeah, absolutely. So my view of servicing and intensive servicing is servicing is really those kind of common routine actions that you may take. Collateral releases, subordinations, maybe modifications to the payment date, very simple, less complex changes that you can make. A lot of borrower and in our case as an LSP, communication with the lender, answering questions, educating about those routine actions, kind of the monitoring, the tracking. Intensive servicing really comes into play when you have first a loan, a borrower that can be in distress in some way. And we often think of that immediately as payment, right? Oh, they've defaulted on payment. There must be some stress there. But really, intensive servicing can start where the portfolio monitoring ends and kind of pick it up from there. So for example, if you're monitoring your portfolio and you aren't getting a response from your borrower, you've asked multiple times for things, you order up a site visit, you see that, wow, they're not in the space that they said that they were in, or that they, put in their lease documents at the closing table, or if you pull a UCC search and notice that they've taken on an exorbitant amount of additional debt since your financing. These are things that, while your borrower may be repaying, can shed light on a bigger underlying issue. And with the SBA not allowing lenders to collect on a loan or call on it, submit for guarantee just out of technical default, intensive servicing gets a little bit gray, because you still want to ensure that your borrower is in good standing. So you're going to pick it up. This might be an opportunity to explore, is there a need for a workout? Why did you take out all of this additional debt? What happened there? That's huge in the MCA space right now. Totally different topic. But there are, all of these things that are happening. Why did you relocate? What happened with your space? Are you even operating? And sometimes those conversations lead to that intensive servicing of trying to bring that loan, that borrower, to a place where, despite all of these underlying challenges that they might be facing, they can still manage to repay the loan, whether it's through, again, exploring workout options, modification of the term, deferments, offers in compromise, ultimately still protecting that guarantee, which is truly the essence of intensive servicing, where you're collecting on the collateral, trying to recover as much as you can, and possibly involving legal counsel if you think that it's necessary, or if there's a bankruptcy that comes up. All of that then gets into other legal requirements outside of SOP that you still have to comply with, that may even supersede some of the SBA's roles. So that falls into a completely different space that requires a very unique skill set, and not just understanding of SOP, but state laws, what counties will allow you to do, certain bankruptcy laws. So intensive servicing is definitely its own gorilla there.
Yeah, I guess one way to think about it is, servicing, sort of happy path, if you will. Intensive servicing, it's no longer happy path, and nobody's interested to see that small business default on the loan. Not certainly, not the lender, certainly not the borrower, but not the LSP team. So you're sort of coming into a partnership with that borrower to get them to a place where they're in a good place, and the loan is performant. But just everything from the subject matter expertise about like the things you can do to help, to just the finesse, the collaboration. It is really a very different motion.
It is, and I know you mentioned the LSP part of that too, and that just brings me to that next topic of, that's why having a preferred partner that you can lean on that does know this, in our case, this is what we do all day, every day. We're constantly on the cusp of learning what is happening tomorrow with the SBA, not just today, but tomorrow, future things that are coming, so that we can stay ahead of that for the lender to ensure that they are constantly complying. Because we do this every day, because we know which common mistake is made, you cannot collect on an SBA loan in the same way that you do your conventional loans. We know this. We live and breathe this. And I work with so many lenders that have made that mistake through no fault of their own. It's just a lack of understanding of what the SOP requires. So leaning on an LSP, for example, where this is where we live and breathe, this is where we reside, we can bring that level of expertise to ensure that you aren't missing those critical components to remaining compliant with that SOP, and that you are doing everything you can to salvage the loan, protect the guarantee, protect the program.
Let's talk for a minute again about the technologies that can be so helpful in this space, and just an interesting situation that has persisted for a long time. I'd be really keen to just get your thoughts on it. But I think everybody would be familiar with the loan origination systems. There are a number of them out there. Also, the loan servicing systems. However, historically, these are different systems provided by different vendors. They are typically very siloed within the lending institutions in terms of like the departments and the teams that interact with them. And there's just this distance, I suppose is a way to put it, and sometimes like a great distance, not just technologically, but just geographically between like this system that was used to originate the loan, and then, as we said, that all important long tail of servicing the loan it's a different platform altogether. Why has that, is first part of the question, why has that situation persisted for so long? And secondly, what do you see as the risks to allowing that distance to just remain between those two functions that are so just inextricably, related?
Yeah. So in my experience, what I've seen is so much emphasis is placed on origination because that's what's considered to be where your revenue comes from, right? You're out pounding the payment, you're bringing in those deals. That's where you get your interest income coming from. It's this big space of accolades. Look what we did, we produced, and that is certainly important. And we, as a servicer, I wouldn't be employed if we didn't have the originators, right? I service the loans they originate, so we definitely need each other. But because there is such an emphasis on originating loans, that is where platform importance has lied as well for so long. And servicing, just like the concept of servicing, the platforms have become almost an afterthought. And part of that too is because, and I think I'm speaking for every lender on the call here, people tend to work in silos. As I mentioned before, there's a separate servicing SOP that often just is forgotten about. And origination side doesn't fully understand what servicing does and vice versa. So you tend to work in your own space, your comfort zone, and you overlook and you neglect to see how that segregation actually affects all of your partners, all of those relationships that you have, your borrower, the lender, us as an LSP, attorneys, everyone involved. So there has been kind of a lack of interest and inability, lack of knowledge really around both SOPs to kind of bring them together in a way that helps to develop that tech to be cohesive with what do those SOPs require? How do we ensure that there is that seamless transition from end to end there? And I think that's ultimately why that just hasn't happened. And the risk there is, going back to the earlier part of the conversation with just how technology can improve what we do on a daily basis. The risk in continuing to work in siloed platforms almost negates some of the benefits to that technology because you're working against it as opposed to allowing the technology to work for you and have that visibility, the transparency from end to end, whether it's passing borrower contact information easily, whether it's ensuring that documents are in one central repository so that anyone who needs to view them can. On the servicing side, we always have to look at the loan package because we're doing reviews, we're servicing the loan based on how it was originated. So being able to work within one unified platform eliminates some of that, lack of communication, just eliminating the inability to track and monitor. If it's taking 10 days from a loan to get from your origination platform into your servicing platform, we've lost the ability to track and monitor some of those immediate post-close items. So having that same comprehensive, unified platform is just so critical to being able to comply with SOP and the program requirements. In addition to making workflow much more efficient, obviously.
This has been, for some of the viewers that may not have been able to tune into part one of this mini-series, I had the opportunity a few weeks ago to host a webinar with here at ABA, but with our head of head of SBA origination, David Tensley. And so I think this is so appropriate to sort of bookend that conversation with this servicing conversation. And during that conversation, I shared. I think the industry is going to see a number of really exciting firsts in terms of product innovation from Lenders Cooperative real soon. And you have just mentioned a big one. So we are bringing to market the first unified platform that is all of that origination workflow and all of that servicing and intensive servicing workflow on one platform provided by one vendor. So I think that is going to just bring so many benefits to, and help so much in solving that problem that we talked about a question or two ago in terms of that distance. But maybe tell me one or two or three more of the advantages that just kind of jump out at you. Like I've heard so much just recently about, the work that we do on mods and renewals. Well, if that function is, completely removed from a loan that was originated that's now sitting on, some platform somewhere, it's so much more a challenging thing to do to collect all of the information that was part of the original package. And it could have been, sometimes these mods are taking place shortly after the origination and just a modification is needed. So you need to go right back into it, maybe not start the process from square one. You have so much information about the borrower, the borrowing structure, the guarantors, et cetera. And so just having that be right next to, in platform, that need seems to me like such a helpful thing to do. But what else occurs to you?
Gosh, there are so many possibilities, and one of the reasons I joined Lenders Cooperative was because I truly believe in our technology and what we're trying to accomplish for the lending space. We are fortunate to have some of the most brilliant minds, brilliant tech minds that I've ever worked with on our side. And also because we have the LSP component, that SBA knowledge that again, just connects origination to servicing and brings us into that unified platform. You mentioned the documentation being immediately available. I'm super excited about that. AI, we have a knowledge base within our platform, which allows lenders to immediately find answers to some of their most common questions. That's at their fingertips. The ability to share that through platform, to share that through technology, it's like nothing I've ever experienced before. And I mentioned earlier during the intro time about the pain points that I experienced as a lender in on that side of the house, and how being able to use that to contribute to building out platform that can eliminate those pain points, some of those manual tasks, the common lack of communication from end to end. It's just super exciting for me. It's invigorating, and I think we truly are a leader in that we do have that all in-house, and that we recognize how important that unification is to all lending spaces, but especially in the government guaranteed space, where there are so many intricate SOPs and details, and sometimes the gray that can be solved for by plugging all of that into a platform, having the documents available, the tracking available, the reporting. It's exciting to me.
Yeah, and something that has, it's almost like every day here I start to see, new ways that a unified platform is bringing just insights and analytics and all kinds of things to the fore that weren't really possible prior to that. And I'll give just an example, like, there's a number of discrete efforts going on around dashboards and visualization, because when you begin to have a single platform for both origination and servicing, you no longer just have dashboards that are pretty useful for looking at your origination activity. I can see application intake, how many loans I might have in underwriting, processing, closing, how long were they there, and if they were there longer than they should have been, or the industry average, or let's just say the goal of that lender, then they can understand that and work on it. But still, it was kind of just a picture of the origination activity, and how the loans were looking in those different stages. You could go, over to another system, probably provided by another vendor, and have some very helpful reports and dashboards on servicing. But the two
so they were probably in Excel, actually.
Maybe, yeah, that's fair. But they weren't connected, and
exactly.
Our teams have been really having fun with, hey, now that it's together, there could and should be dashboards that are showing, the loan life cycle, like we're fond of saying, all of it, right? So I don't want to just see like, what's my origination, team doing, who's the leader for the day or the week or the month and on the underwriting desk, but I want to see like, how did my score and go loans, how are they performing over the last 30, 60, 90 days? And maybe, with a quick view to that, because mind you, those are loans that are now in servicing, right? So, but as the origination team is able to have that data point, that visual, and see that, okay, maybe I'm making a slight tweak to my model for approval, whether it's estimated loss, SBSS, or FICO, and I can widen perhaps the aperture a bit, get more, coming through for intake, or tighten it down if I need to, based upon how I'm seeing those loans perform. So just so many things are, become sort of apparent to you and to the developers that they can have a lot of fun working on when you bring those two functions together on one platform. So that's going to be super exciting. Maybe just as closing out the conversation today, tell me and those that are tuning in, what are you most optimistic about, or what gets you really excited, both for the industry, but also for the clients of Lenders Cooperative?
For the industry, speaking for us as a fintech, again, technology is at the forefront of everything we do. We're in a unique day and age where you almost can't function without some element of technology. Financial services always going to be needed. So I'm excited to know that I'm in an industry that it's here to stay. It's not going anywhere. It can only get bigger and better and grow. And the possibilities are truly endless when you're in that space. Specific to Lenders Cooperative, I mentioned the people that we work with, truly having some of the most brilliant technology-minded folks, really putting boots to the ground on what we're doing in our technology space. The willingness to listen to what is really needed, and to hear about how even with a fully built platform, it can still be enhanced, because every day we're doing things in the industry that are changing and needing those updates. It can be something as small as what we've recently seen on, change to the rate index, and something even bigger to a whole SOP change that needs to be added into platform, or a form that's being used. I think if we learned anything during the pandemic and specific to PPP, was how critical adapting technology to what is happening in the macroeconomic environment is, to continuing to sustain and to grow and to flourish. And I truly think that we have that here.
Yeah, I love it. That's a great POV. Really appreciate your time, Rachel. And
likewise.
Tim and team at ABA as well. And thanks for everybody that tuned in to listen.
Thank you, Chris and Rachel. That was excellent. You did a great job of asking a lot of questions and dialoguing and interacting, and really asking and answering the questions that I think our listeners would be asking. We did have a question and answer box to the right that anybody could put a question in, but I think you asked most of the questions and answered them. So great success there, and excellent webinar. So I'd like to thank today's speakers, Chris McClinton and Rachel Hunsinger, for their expertise and insight into SBA loan servicing, managing the portfolio after the close. As I mentioned in our opening remarks, all attendees will receive an email with the recording of this webinar, and you can expect that in a day or two. This concludes today's ABA webinar. My name is Tim Pinnell. Thanks for joining us today. Have a great week.
Thank you, everybody.